We're going to analyze an SP500, the US index, today. First of all, we're going to be analyzing from the daily chart to the 4 hours, then to the 1 hour. The 1 hour time frame is often the one that we use to place our trades, or we are a medium term to long term trader. So I'm just going to identify the key area where the market shift from being bullish. So I'll point to the area the market was bullish at. So the previous market structure is bullish, as you can see. So this whole area is bullish. And this high got created. So this is the highest point in the daily chart. So we call this a high. And obviously when we identify a high, we also need to identify a low, so we can base our structural points out of. So this is called the low. And what did the market do from this point onwards? It seems to have went below this low here, creating a lower low, and then digged a bit deeper and created another lower low. And a retracement happened. We're going to use our Fibonacci to establish if this retracement over here highlighted area is of significance, and it is reached beyond the 50% and almost hitting the 71% area. So this area of retracement is definitely I want to be considered to be considered. So we're gonna call that a lower high. Then the market started to go lower and lower. So from this point onwards, another lower was created. But you might be asking yourself, why don't we call this area a lower low and a lower high? The reason being we haven't retraced enough. So we use the Fibonacci from there to there. The retracement hasn't come all the way up to 50% or beyond and went down. It went just a tiny bit below that area. So we're not going to consider that as a valid lower high. Same with this area too. You might be asking yourself, why don't we consider this another lower low? Reason being, the market hasn't retraced enough. As you can see here, it hasn't retraced enough. It hasn't hit the 50%. It hasn't hit it. If this retracement was a bit further up, went down, would have considered this a lower high, but it hasn't. So what's our alternative? Our alternative is the next level of significant retracement, which happens all the way from here. So we have a lower high, lower low, and a lower low here. A lower high here. And my reasoning is this retracement over here has been significant. It has hit the 51% level, went beyond, and almost hit this 71% level. So that's a valid area. Cool. Cool. So we have the lower high, the lower low, and now the lower low. Another new lower low has been created. So now what it seems to me is that the market is going to be creating some sort of retracement in this region. Going to be creating another lower high, and then potentially we'll be targeting taking out this lower low. So the market is most likely going to, structure wise from the daily time frame, go low and create another lower low. So our job here is done on the daily chart. Our job here is done. We're not going to be looking for anything else for now. We just know that the daily is bearish. So we must be looking for a long-term selling opportunities. That's all. If we want to be buying, only short-term. Okay. So this gray area over here, we have to go down to the 4-hour time frame, and we will see. Just call it 4H. We have to look at the 4-hour time frame and see this kind of what happens here. So this retracement, as we discussed before, is going to be bullish in nature. So it will be making higher highs and higher lows. Once this starts turning bearish on the 4 hours, then we're going to get that massive impulse that comes and takes out this low. Okay, so we have to wait till the 4 hour turns bearish, because the looks of it, the 4 hours on here is retracing. We don't have any signs that it will, for now, start going down. So we have to find more areas of structure that needs to be broken, more areas of higher lows that need to be broken for us to take our trades and base it off the daily and sell it. Okay, so let's just write a couple of bullet points on the daily. Let's write a couple of bullet points so we understand what's going on. So the daily time frame is bullish. That has turned bearish since, basically, when was that high formed? It was formed on the 4th of January 2022. Since 2022 January, so almost a year, the market has been going down. So what makes us think, oh, the daily is going to reverse anytime soon, it's going to be bullish? Nothing. There's no reason we should be expecting buys if we are, a mid to long term trader. There's no reason. All right. So, and also, we are currently trading at area of potential lower high. This area of a potential lower high. Okay, that's all we got. That's all we got from here. That's all we got from here in this time frame. And also the last point is we are retracing. Maybe? Okay. The reason we're retracing is unless this lower high, the market goes beyond that lower high and creates a higher high, we have to stay with our bias of the market going lower. It has to, because there's no reason for us to be expecting long-term buys now because a significant level hasn't been broken yet. All right, that's all. So these are the 3 points. All right, let's go to the 4 hours. And we're going to go to this gray area. Okay, so we got the gray area. The most significant structural points on the green area start from here. The most significant points are this lower high, this lower high, or we just can call it a high, and a low, which is the one previous. So low. What happened? The market created another lower low. See? So the market agrees with each other now. The daily lower low we had is also a 4-hour lower low. Let's write that down. We'll put this in red. All the 4-hour kind of analysis, things I will write as the 4-hour are going to be in red. All right. Okay. So this high got taken. The market went above this thing, creating us a level of higher high on the 4 hours. Always remember that. So the 4 hours are structure. The reds are the structural 4-hour points. The red font. All right. So, and this can be called high low. How do we know that it's a high low? Because if we use the Fibonacci from the most recent lower low, which is here, up to here, the market goes beyond the 50%. You can see the market goes beyond the 50%. So that is a valid higher low. Okay. All right. So we still continue to make higher highs when this high got broken. It came back down. So you might be asking yourself, can we necessarily call this area a higher low? Let's see. No, we can't call this a higher low because the market hasn't come down to the 50% level and went before that. So the most significant high is going to be here. Higher. Oh. Okay. So for the grand scheme of things right now, the most significant structural level on the 4-hour is this higher low. Once we start going below this higher low, once the market starts coming down on this direction and goes below here, we can definitely say, okay, some level of lower low has been created. A lower low has been created definitely. Before that is speculation. It's a big speculation because we don't really know if the market is going to just go here down and go up, or if it will really go lower, come back up and go down. We're not really sure. So we're speculating quite a lot. Okay. So the market has created an area of consolidation in this region over here, which is very important to us. Area of consolidation, as you can see, consolidated a while, broke above, and now is expanding. So as far as we're concerned right now, we are in a retracement phase. So let's write that down. We are in a retracement phase. Phase in 4 hours. Most likely, we will create a higher low if current trends don't change. Okay. So it's most likely we will be retracing, say, to these levels, etc. And this whole punch from up here down to here is a retracement, because the 4-hour is clearly bullish, as you can see. It's a retracement. So how do we know we go out of a retracement? So this whole area is a retrace. This whole bearish area is a retracement. How do we know this is not going to a retracement, but more of an impulse? We must see a lower high and a lower low, and we must take out this high low over here. We must. In that best case scenario, we will wait to catch trades on the lower highs and go down. That's the best case scenario. If not, we are going to be creating a high low here and just come back down, up, create a higher high. Basically, take out this high. So to be 100% sure, we need to see this movement down, below here, retracement, and then go down. Okay, that's the 4-hour. So remember, on the 4-hour, we are on a retracement phase. So whatever happens here is going to be bullish. It's bound to be bullish because impulses, technically, if the impulse is going to start, we're going to start making a bullish kind of higher highs and higher lows on here. If it's going to be an impulse. If it's not going to be impulse, it's going to be creating a bearish kind of structure. So we will consider this and this. If a higher, if a lower high is created here and a lower low is created, we'll consider this whole thing as an impulse, and then we'll catch on the retracements and sell it down. Okay. All right, that's the 4 hours. Let's go to the 1 hour. Okay, the 1 hour. What do we say on the 4 hours? We're on a retracement. So let's see our point of reference. So our point is going to be from here. This is going to be called our low. Remember, we rinse and repeat. We rinse and repeat. It's our lower low. Our lower high. Or just call it a high. Okay. So right. So we establish this as a lower low. And then we can use the Fibonacci from here to there. Lower low. Market technically created a lower low got created. And the market went above this level. But we don't really call this area a high high because we haven't broken this high yet. So once the market breaks that high over here, we're gonna call this a high high. But we have a problem with the Fibonacci. We're not even close to 50%. So we're not going to call this a high high. The high high must have happened somewhere around here. The high high must have happened somewhere here. We don't consider these areas. Let me highlight it for you. We don't consider here, this area, significant because this is no higher low. This is not a higher low. We haven't retraced enough. So we're retracing enough right now, as it looks. So we go from the lower low, the lowest low, to the highest of high. And technically we are on the 50% level right now. So if the market weighs here, it can create a high low. As you can see, we can create a higher low over here around this region and go higher, essentially. But unless, like we said, unless this low gets taken, the market comes below here, I'm not going to be looking for selling opportunity. Unless the market comes trickling down here, I'm not looking for sales. Otherwise, it is just going to be bullish. We don't want that. Okay, let's write it down. Market is bullish on 1 hour time frame. What else? We recently broke out of consolidation and we are likely to create a higher low we are not ready to take any cells. That's it. The risk is opportunity takers will be selling around this level. Around this level here. They'll be selling around this level. The most riskiest. I'm expecting the market to create a lower high around this level. Following this high, create a lower high here. Basically switch structure, start becoming bearish. But as we can see, the 1 hour tells us the market is still bullish. The 4 hour tells us the market is bullish. As you can see, the 4 hour tells us the market is still bullish because this low hasn't been taken yet. So unless this low gets taken on the 4 hours, the 4 hours is not going to be bearish. The 1 hour is this low. Unless this low, the market goes below it, creates a lower low. It's not going to be bearish in the 4 hours yet, and the 1 hour yet. So in all, and the most significant levels of structure and the lower lows here, the daily. But that's going to take a very long time. You know, we have to find any bearish setups, any bearish trades around here, around this region, to take down. But it's not ready yet. By the looks of it, it's not ready. It could essentially just come down to these areas and create a higher low and go up. Or if our scenario is coming to fruition, we are most likely going to create a lower low somewhere here, and that will definitely give us a sign to go selling. Okay, thank you.